5-star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
Hey guys, thanks for watching. This is Andrew from the Options Millionaire community, home of the internet's #1 investing resource for all things options related. Probably one of the biggest questions I get is how do I hold the play long enough to make some big gains? Now, most of the time, yes, I live by the gospel of profit taking. Take the money, take your profits, and get out. But there are occasions where you want to hold a high confidence setup for a long term to get that money, and that requires you to identify the trend, and that's exactly what we're going to be talking about today. So stick around, you're going to want to catch this one. One of the hardest things we do as retail traders is to figure out when to enter when a trend is forming. It seems easy in hindsight, but during the time that it's happening, our mind plays tricks on us. When is the trend going to reverse? When is it going to keep on going? And that's what we're going to talk about today. How to identify trends and the associated reversals. In this video, we're going to go over 4 things: a trend up day, a trend down day, a trend up with a reversal, and a trend down with a reversal. In addition to identifying what these look like and how they play, I'm going to show you how I use my tools and which tools I use to identify and when to enter and when to exit. Now, there are 5 basic tools that I use to identify price action and the associated plays that I take along with them. The number one is the entire market awareness. I have prior videos where I talk about this, where the market itself is the most important indicator. All of everything on my watch list that you see to the right here: futures, X sectors, tech, and then of course the futures and the meat and potatoes, the yields, everything associated with the market is what I'm monitoring. If the market's trending up, you play up. If the market's trending down, you play down. The entire market is your friend. Number 2, volume. Number 3, price action. Number 4 are key levels, i.e. my SR levels, my calculated support and resistance levels that I calculate every single morning and post them for the Discord. They are very, very important. And then 5 are any tools that you use in your trading system. I love to use Bookmap. Bookmap is a fantastic tool to identify liquidity in real time that comes off and comes on. So those are the 5 things. I use those every day to identify when to enter, when to exit, what the price action is doing, and it works out pretty dang well. All right, so let's go ahead and jump on in. We're going to start out by analyzing a trend up bullish day. Back on March 18th, this is SPY, March 18th, 2022. And you can see that we started out the day very bullish, and we kept on being bullish all day with no real bullish pullback. And one of the first things I'd want to identify is the price action, the highs and lows as we trended up. I would be wanting to plot those and figure out, is the highs being taken out, are lows being taken out, is it higher highs, is it higher lows? And we usually do that with trend lines. That's the best way to identify a trend, is using trend lines. So what I would do is I take the trend tool here, and throughout the day, I would be plotting the highs and lows. And we see that on this particular day, the trend up went up and never really broke down. The trend just kept on going all day. Now, it doesn't have to be precise, it doesn't have to be perfect, but you can kind of see that we never really entered into a wedge. It was 2 parallel lines, which is an upwards trending channel. And every time we touched one of the tops, we came down. We never actually took out, broke down below the trend down, and we just kept on going up. And then obviously we rode the 8 EMA all the way up, which is another indication of a trend up day, is that we're riding the 8 on the way up. But when I see this start to happen, I'm seeing the price action continue to take out highs. I'm seeing it never actually break down through the channel to the south. And then in addition, I'm seeing the buying volume maintain. And that's probably the biggest indication along with the price action is the buying volume. And you can kind of see here, there, and then we had another big buying spurt and another big buying spurt and another big buying spurt. And the price action would dwindle and then just pop, dwindle and then pop. And the buyers continue to pop this up and up and up throughout the day. So the buyer's volume maintained throughout the day, and the price action kept going up and up and up. Now, throughout this, I would be monitoring the market as well. I'd be monitoring the X sectors. I'd be monitoring the tech sector. I'd be monitoring everything to make sure that everything is supporting a bullish trend upwards. If I saw the financials and tech and healthcare, everything is popping green, then I would be more apt to continue to ride this up. But what I'd be looking to do is enter on the downsides of everything. On a day like today, I would not be looking at shorting anything. I would be buying the lows. So every time I drew back, maybe to the VWAP, I would take a call or a long futures at these position and ride it up. Obviously, I'd be watching the price action of each individual candle. A nice, strong bottom wick on a candle with supported buying volume would be fantastic, and then we would ride these up. But on a day like today, it's very important to draw trend lines and to follow the volume. If I don't see the lows being taken out, then that tells me the buyers are still around. The buyers are still willing to pay this price and to bring it higher. So play with the trend. I want to play calls until the market tells me not to play calls. So I want to play calls on the way up. And then if I play 3, 4, 5 calls and then eventually the price does break down and I take a loss, so be it. I'll put in a stop to stop me out, and then I'll start playing puts. I'd rather play the trend upwards than try to time the top and then can constantly being blown out by puts when all I got to do is play calls and then let the market tell me, all right, and now it's time to play puts because now we're going to break down through the channel, which obviously today we didn't get. So play the trend, play the price action, follow the volume. See the volume maintained throughout the day. Awesome, awesome stuff. All right, now we're going to look at instance where we have a trend up with the reversal to the downside. You could see when this type of stuff happens, it usually happens pretty aggressively. So you have to identify it quickly so you can make sure that you get in at a decent position. Now, I'm not looking to time the top here because that's not practical or realistic. But what I want to do is identify that when this thing does break down, that it's going to continue on downwards, and which is hard to do. You know, we don't have a crystal ball at the time. It's easy to Monday morning quarterback this, but we want to identify price action to give us high probability situations. So the first thing I want to do, obviously, is maintain trend lines. If I see this price action start to climb throughout the morning here, I'm seeing the buying volume. Now, the first thing I'm going to do is start to apply these lines, these trend lines on here. Now, I'm not much for pattern trading. I don't do very much pattern trading, but I do like to play trend lines because all it does is tell you the highs and the lows, which is price action. Now, as you know, as traders, we assign words to these like this is a wedge or this is a channel, which is a pattern, but all it really is identifying the highs and lows in the market, which is identifying price action. But you see in this, which the way this differs from the last example is that this is identifying a upward wedge, which all this means is higher highs and higher lows. This tells me that the price action is tightening. The buyers are getting weaker and weaker. This is just the nature of this pattern because what happens is the buyers are very strong. They kind of flush here, the buyers step in, we take it up. Well, then we have a little mini flush here, and now the buyers come up, but less and less. Every time this pops up, the buyers are weaker and weaker. In addition, if you look down here, the price action is coming down and down. We have, first of all, we have this large volume node in here, then here, then here, and the volume is diminishing and diminishing all the way down. That tells me the buyers are weaker and weaker. So when I see an upward wedge here with the diminishing volume, that is telling me the market is looking to potentially reverse. Potentially. We do have a large volume node spike in here with this one last push. We touch R3, which is one of my calculated levels, and then we reject R3 and come back down. Now, when do we play this? Do we want to play this at the top? You could, and some people probably do. But I'm looking for the higher probability trade. Wait for the breakdown. And what I want to do is break down through the channel and break down through the prior strong swing low. So this would be a prior swing low right here. So I'm looking for this price action to break down through the channel, come down through the 8 EMA, break that prior swing low channel, and then we finally start to flush. We finally come through the 8 EMA. We have increasing selling volume. You see that the nature of the volume completely changes. It goes from majority green to majority red, and we have little spikes in the seller's volume here. In addition, we finally break through the 8, and now we're trending down, bouncing off the 8, bouncing off the 8. Probably me, if I were to enter a put up here, I would scale out some of the profits, which scaling out, by the way, is a huge, huge benefit to you because it removes risk and it removes your emotion. I would scale out, take some profits, and see if we rejected or bounced off VWAP because a lot of times we do. And see here, we did get a minor little checkup on VWAP before finally flushing and come all the way back down. We ended up going trend down the rest of the entire day. And then we settled right here on my calculated S5 level. Now, in addition to this, like I said, I'd be monitoring the book map to make sure that the liquidity is adjusting because the market does adjust liquidity throughout the day dynamically because that's the nature of the market. But I'd be watching the price action. Here we have very healthy sell candles. There's no bottom wicks. There's very little. We have all straight top wick, very large bodied red candles flushing down that have very small bottom wicks. This tells me the sellers are very much in control here. If I saw a lot of, let's say, these type of candles, these hammer bottom wick candles, I'd be like, all right, well, the buyers are continually trying to step in here, but very strong price action to the downside, very strong sellers volume on this reversal. So this is just a great example of a trend up with a reversal debt to the downside and monitoring the price action associated with it. Obviously, again, I'd be monitoring the other sectors. Was this a news event? Was this a market shift with tech, with XLF, with the bonds moving, everything? I'd be monitoring the entire market here on my watch list to identify and maintain this position. But this would have been a fantastic example of a reversal. All right, so next we're going to look at a trend down with no reversal. So this is the opposite of a trend up. This is a trend down day, a very bearish day where we start out selling off and continue to sell off the rest of the day. So you see here, we had a little bit of green pop out today that was immediately sold off. And then now we start to form lower lows and lower highs, which is all in a downward channel. Now, the first thing I would do is I'm looking to identify the highs and the lows of each particular price action. And here we find almost immediately that again, this is another channel. We're not looking for a wedge here because this is a channel, which is telling me that the sellers continue to break this lower and lower. A wedge would form here is that if we pop this highs and then the price action continue to tighten, and then we finally blast upwards because of seller's exhaustion. But here we don't get seller's exhaustion. The sellers continue to take this lower and lower and lower, forming the downward channel. Now, another thing here as well is that we have the sellers maintaining volume. We have the initial high volume of the day, which is usually pretty common in the first couple of minutes of the day. But then we have the sellers maintain. Obviously, the sellers are a little bit lower. However, the selling volume maintains the entire day. We have the same level of selling volume throughout the entire day, and then a little pop into the end as we sell off right into the close. But you see here, we still maintain this channel. We did test a few times and then reject and come back down. The price action was a little more wonky here. Now, the seller's action on this wasn't as quite as strong as the other day. So when I see smaller price action like this, I really want to adjust to the other time frames. Now, this is a 3-minute. Now, watch what happens when we switch over to the 5-minute. We start to identify a little bit stronger price action. The candles are a little bit more noteworthy. We have a larger, nice distribution of selling volume. And let's even go to the 15-minute. And here's a 15-minute. If we go to the 15-minute, we see very clearly that this is a very bearish day. So we hear a nice top wick candle with some nice, healthy, large-bodied candles with no bottom wicks, which tells me the sellers are maintaining. And then look at the volume. The volume on the day is still very much bearish on the 15-minute. So it helps a lot to adjust to longer time frames. It helps you identify trend. So what I do is I start out adjusting to all the different time frames to identify a trend. And then once I identify a trend, I look for entries on the 3-minute, sometimes on the 5-minute. But the 15-minute, the 30-minute, the 60-minute chart are all very much your friend. And you can identify an otherwise unpredictable action, some trends. And this is here. This is the 15-minute chart, and it shows us clearly that we are bouncing off the 8. We're rejecting the 8 coming down. We came up and tested VWAP before rejecting. The seller's volume is nice and strong. So here I want to identify entry points for puts on the particular tops. So here we had, like for this example, we had a candle start to form, and then we top wicked, and that's indicative of a reversal. This is a 3-candle setup that's very bearish. And then obviously we flush, we take out the prior swing low and come on down. So identifying these at the top is very, very important. Again, monitoring the entire market as well. But the price action on this was indicative of a nice trend down day. And again, play the trend, and you're not always going to be right as well because nothing is ever perfect. So you could take a put here and we could continue on up, but that's why you do risk management, position sizing, and you set stops, because when you are wrong, you stop out and you identify, okay, is this reversing? Do I see the buyer's volume starting to spike? Cool. I'll play calls after I stop out. But you want to play the high probability trades here, not the perfect trade, the high probability trades. And today the high probability trade was a trend down. So you play puts until the market tells you to play calls. All right, so moving on, we are going to talk about a trend down day with a reversal. Now, this one is pretty common, so this is something that you really want to pay attention to. SPY is infamous for doing this downward trending stuff in the morning and then reversing to a V recovery into the afternoon. And this one happened pretty dang aggressively. So I'm going to identify the things that we discussed earlier, plus I'm going to show you the book map on this particular example. The book map is a tool that I use after I do all my cross checks to show me where the liquidity is adjusting the market, and it shows you exactly how it interacts when something like this actually happens. So right off the bat, we've already drawn the wedge. You see here that the price action is wedging to the downside, which tells me the sellers are weakening. The buyers are still propping this thing up just occasionally, and the sellers are refusing to bring this lower. They're a little weak. In addition, you see the sellers' volume starting to diminish. You've got the sellers just kind of dwindling down, with a couple of spurts. But all in all, the sellers just refuse to bring this thing lower and lower, which tells me we are reaching market value on the price. This is where the buyers and sellers are agreeing that, all right, we're willing to pay and sell here. Now, in addition, I had my S3 level calculated right there. That was my S3 level, 443.48 for this particular day. Now, what made this level particularly strong is the fact that it correlated with a very large volume node on Bookmap. So the Bookmap level here, we had this 445, 44, 50 level on the ES, which I do Bookmap on ES because it's a lot cleaner. It's got a lot more accurate entries. And the market follows ES. So when I saw this level start to be put on here, I'm like, all right, well, at least could have a potential for a bounce. Now, the fact that this level was correlated so strongly with my S3 level showed high confidence in this particular level. So what I'm looking for on Bookmap here is how this price action interacts with this particular level. So we come down here, boom, that level is taken out, and immediately when that level is taken out, all that volume adjusts off. Immediately the price action starts to bounce. Now we're looking for carry forward on this particular price action. So here we are. I'm watching the prices come in. I'm watching the buyers hit this thing. I'm watching all that liquidity just disappear. And then I'm looking for the liquidity to move higher and the price action to move higher. And there we go. We start eating up everything. We start eating up all this liquidity. The bid and the ask starts moving up. Everything starts aggressively popping. And then I'm watching for the trend break. We finally break through the upward trend. We break through over the 8 EMA. We finally break through the VWAP and up and up and up. And then we see the seller volume. Let me clear out these lines here. And the volume goes from mostly sellers to a big, strong buying volume here, and up we go. We break through the 8. We break through VWAP. We bounce off the 8. And obviously for the rest of the day, it turns into an upwards trending bullish day. But there's a key indication here now that everything flipped bullish. We broke through the trend, we broke through the 8, we broke through VWAP, the sellers popped it. The Bookmap showed that all the liquidity came off 44.50 and up we go. There's a very large node at 44.90, and that's almost about where we finished the day off, is up here at 44.90 and above. So a great example here of identifying this particular trend and when to enter, when to exit. You could rode some calls here for a very nice gain, and then off we go. But that's all it really is. That's all. There are 4 different types of the trend that we need to identify: is the trend up or trend down, the trend up with a reversal, and a trend down with a reversal. And we went over those today. And I hope it gave you a little bit more insight on how to monitor the price action, on to when to enter, when to exit. Now, remember, as with all things, it's not perfect, and there are some times that you're going to take a play based on some high confidence setups, and you're going to lose, and that's fine. But that's why you have to bring in risk mitigation. You have to bring in position sizing into the equation, and you have to set stops, because when you're wrong, you stop out for a small loss, and then you can start adjusting. But playing the trend is your friend, and you play the trend until she bucks you. That's all you got to do, is just keep on playing the trend. And then when she finally decides, hey, I'm going to break this trend, cool, you stop out and then you identify the new trend. And that's part of our deal as traders. Trend trading is the best way for you to make consistent gains. Instead of trying to play reversals, you have to play the trends that the market is handing you. And this is the way to do that, is to identify with price action, with volume, with market awareness, which is the most important one. And then after you bring in those big 3 things, you bring in tools. Like, for example, I'm using Bookmap, which I hope that shows you how valuable a tool on the backside can be. So that's really all I got for you. If you have any more questions, you can hit me up in the Discord. The link to the Discord is down in the description of the video. You could DM me there anytime, or you can email me at optionsmillionaire2020@gmail.com. Follow me on Twitter as well. We've got the link down in the description. If you're interested in learning more about Bookmap, the link to the affiliate is down in the description of the video as well. Plus, I talk about it more in the Discord. An awesome tool to augment your own personal system to make you even better. Like I said, it's just a tool, and that's all tools do. The tools make you better. They're not your entire system, but they make you a better trader from what you already are. So thanks for taking the time for watching the video. Until next time, this has been Andrew with the Options Millionaire Community, your home for the #1 investing resource for all things options related. Until next time, I'm out.